Welcome to Whiteboard Wednesday. My name is Giles and my business is Equidity. And today's session, we're going to dig a little bit deeper into the strategies of creating maximum capital growth out of the investment properties that we buy. Talked about it last week, Plan A and Plan B. Today we're going to dig a little bit deeper into Plan A. That was organic growth. This was the growth that happens to property prices due to economic factors which are outside of our control. But what we can do is we can buy properties which are positioned to maximise the potential growth of that asset. So how do we do that? How do we find an asset which is positioned to outperform the averages for capital growth? Well, the main thing about it really is the location of the property. So the location is key. The right location is going to outperform the averages. The wrong location is going to underperform the averages. So what is the right location and where should we be looking to buy? Well, there's three main drivers which I look at when I'm buying properties for myself, for my clients. One is demand, one is supply, these are little tick boxes, and the other is, I'm just going to call it demographics, if you can read my writing. So there's three of those. So demand is the first thing. We need to be looking for a property that is in strong demand. You know, people want to buy properties in this suburb, people want to rent in this suburb, people want to live there, it's desirable. What creates demand? The location, if it's close to jobs, if it's close to recreational activities, if it's close to the beach, wherever it might be, you'll create demand. But you do need to be aware of demand because a lot of people get a little bit starry-eyed about demand because there's lots of areas in demand, and if you look at an area on demand alone, it might look very attractive, but unless we're ticking the other two boxes, it's not necessarily a good place to invest. So the first thing is demand. Do people want to live in this area? The second one is supply, and this is key to the slight supply-demand ratio, but so many investors forget about this. The supply, are there enough homes to satisfy the demand? And if there aren't, is there enough land or opportunity available to satisfy the demand? Because if that's the case, then this is not a good area. So there has to be a limited supply, there has to be scarcity of stock, so that the people wanting the homes need to basically fight and compete with one another to get them. So ask yourself, if you're looking at a suburb, is there strong demand? Is there limited supply? If there's limited supply, then we're on the right track. We've got 2 out of 3. The third one is demographics. So what we really need to do is look at the people who are making the demand and see who they are. Do they have money to spend? Do they have access to capital where they can compete with one another to buy those homes? When we look at what drives organic growth, I talk about we don't control it. What does control it is the economy, and the two main drivers are interest rates, which everyone gets the benefit of, and the other is wages growth. And wages growth is quite isolated. There's parts and cities of Australia where people will get more money and be able to compete for property homes, and there's others where they're not so well paid and they can't compete. So this is key. So we need to find an area with strong demand for owner occupiers, limited supply, scarcity of stock. I want it, I'm having it, I'll pay more for it, because that's what drives the prices up. And demographics, have the people creating the demand got access to capital to outbid one another. If we get these things right, we can position ourselves for the best opportunity of organic growth, and that's going to fill up our asset bank in the future. I hope that all makes sense. If you'd like more detail, like to discuss it more, or need some help in finding the right area, then please reach out. Thanks for watching.